All right, you beautiful people. If you made it to the end of this freaking playlist, the options, market makers, the hedging, the unhedging, the gamma squeeze, the perfect gamma squeeze series, congratulations, baby. It was probably a bunch of boring garbage, but I try to break it down as simple as I can. If you haven't seen the first 3 videos, I think it is, better suited to you to fully understand that whole process before we get into the perfect gamma squeeze, so you can kind of understand why I think this is a great gamma squeeze situation for any sort of stock, right? So without further ado, welcome to freaking Trey's Tutors, baby, where we talk fast and don't skip class. I can best by saying that I'm not a financial advisor nor expert, so take it a second to assault. Let's get into the video. So now that you understand how hedging takes place, unhedging takes place, how market makers work, the options market makers, let's talk about the perfect gamma squeeze scenario. I need to say this, right? None of this is financial advice. This is literally just my opinion. This is what I think would contribute to the most bullish price action, the most trend continuation and momentum in any sort of stock, right? Take that for what it is. So first, to have the perfect gamma squeeze, you need a lot of active calls. You need a lot of open interest, a lot of call option activity, because this drives hedging, which we've talked about before, right? I'm not going to get into that whole process. Go check out that video if you need to see it. So having an active call option is what leads to the setup for a gamma squeeze, right? It's a setup process. It's not something that happens over, in one day or overnight. It's a long process that leads to a gamma squeeze. You need the setup, you need the fundamental and technical setup to get that gamma squeeze. So first is open interest in a lot of overall out the money call options, right? Something that has a strike price above the current market value, has not yet been hedged for. Next, you need supported underlying buying of that specific security, the stock, right? You can't have a gamma squeeze without just by just having call options, because once you buy a call option, you can buy 100,000 call options at $100. If the stock's trading at $50, you did nothing to move the price action until those get hedged for, right? It's gonna take those getting hedged for it to actually do something for the underlying stock, right? So you need actual buying pressure in a security. What does this mean, right? So if you're expecting to buy $70 strikes and nobody's gonna buy the stock, and you think it's just gonna automatically run up there, it's not gonna do anything, right? People need to buy the stock. It needs to have that underlying overall bullish pressure. You need to be beating the bears, the shorts, the XYZ in that sort of trade, right? It needs people to have overall more buying than selling in that stock. It needs, you need people to think it's gonna go higher. So just buying calls will not contribute to price action. We cannot have that in any sort of security for a gamma squeeze to happen. It needs buying pressure. There's no ifs, ands, or buts. It just needs it. It needs it. Third is this. You can create an endless feedback loop if you have both of these first 2 conditions met. You've got a lot of active call option activity. You've got a lot of open interest, followed by supported underlying buying of that overall stock and security. You can create this endless feedback loop until somebody decides they want to take profits, they want to sell, they're done with the game, right? They've made their money, they're done, they want to move on, right? You need first buying, right? Buying pressure leads to call options running out the money to in the money, causing the hedge effect, the gamma squeeze effect, which can lead to a short squeeze. It can lead to shorts covering. This can create, obviously there's no direct order in this. It can be in either direction. You can have a short squeeze, which triggers, call options running out the money to in the money, which can lead to, buying, which can lead to more short squeezing. It can go, endlessly until either A, shorts run out, B, there's no more call options to run through, or C, there's no more buying, right? It can create this feedback loop until it's literally the ceiling. But there's a big asterisk here. It's dependent on a couple of things, right? It's dependent on people not trying to take profits on stock to have the perfect gamma squeeze. It needs people to want, right? This is not financial advice. You do what you got to do. It needs people to continue to want to run the stock price up. They're not satisfied with the overall price on any given security. This leads to the final piece, right? This is critically important, especially with a stock like AMC, where you've got a huge amount of open interest on a given security, right? There's 2 scenarios in which you can actually halt momentum on a stock. Actually one scenario, right? And it's if you end up selling that overall call option and not supporting it in a good way. So what's the best way to contribute to bullish price action? Make sure that you're not contributing, right? If you haven't seen my unhedging video, make sure you go watch that. You can A, exercise that call option, because that won't contribute to selling pressure if you exercise it. It actually will contribute to buying pressure. Or B, you can sell that call option and buy more stock than options. And that piece is important, right? Because if you only buy out the money options after you essentially, made your cash on that premium, right? What happens is it gets unhedged for, and you actually contributed to selling pressure inadvertently because market makers will unhedge their position, right? Go watch that unhedging video. I think it's an important one to watch if you're going to continue with this. I am not going to make this decision for you, right? This is just an educational purpose. This is your individual decision. Sometimes there's scenarios where it's good to exercise. Sometimes there's scenarios where it's good to sell and buy underlying stock and options. More stock than options if you want to see a continuation of an overall gamma squeeze, right? But that is my scenario here. This is what I think is the best case scenario, because what happens if you sell your options and you only buy more options is you created inadvertent selling pressure. The market makers will unhedge positions. They will dump stock back into the market, and your out the money options won't do shit if there's not underlying buying to support that overall move, right? This is your own financial responsibility. If you want to exercise a stock and it hits $60, that's your strike price, and all of a sudden it's trading at 65, you think that's as high as it's going to go, right? And you want to just lock in those profits because you don't want that risk, then sell it. Just buy stock. There's way less risk with stock than there is options, right? It's up to you. But if you do think it's going to go higher, you can actually make more profit on the actual stock by paying up that premium and then also purchasing the underlying stock for however many options you've got and then riding the profits up from the underlying stock. There's a couple different ways you can swing it and really make some actual decent freaking tasty tendies. This is my personal strategy. This is my opinion, right? This is what I like to do. I like to maintain an equal amount of stock and options at all times in my portfolio. I like to have 80% of my overall position in any sort of stock be, overall security be stock, and I like the other 20% to be options. So let's just say, hypothetically speaking, I had $10,000 in an option trade, right? In my overall portfolio, what would this end up being? $10,000. I'm not good at math. I'm so bad at math. That'd be 50 grand, right? 50 grand. So all of a sudden, this $10,000 turns into, I don't know, 100,000, right? I had a great options trade. Now I've got $100,000. Meaning that my overall portfolio just changed from 50 grand to 150 grand. I want to maintain that same 80% stock, 20% options overall setup. So I'll take that $100,000 and to put a lot of this into stock, right? Because what's 20% of 150,000, right? 150K times 20% is $30,000, right? That means that now all of a sudden I've got $30,000 of options buying power to be able to do whatever I want with, right? So 30K, and then the rest of that I'd put into stock. So out of this $100,000, I'm actually taking 70,000 of that and buying stock with it to help essentially offset some of the hedging that would take place if I was to sell those call option contracts, right? That's my personal scenario. Your job, your financial responsibility is to come up with some sort of plan. Don't do this just because I did it, right? You just need to come up with something. Have a plan, because failing to plan is planning to fail, right? This is the perfect gamma squeeze scenario for any sort of stock, right? It just, maybe there's things you could change in some sort of way. I don't know the exact ratio that's awesome, right? It's up to you to make that decision. I'm not here to do that for you. What I am here to do is tell you, these are the things that contribute to buying pressure. These are the things that contribute to selling pressure, right? There's a lot of different things that contribute to a gamma squeeze. And this is something that is actually learnable and employable in the stock market if you yourself are trying to make more money, right? As an individual person, it's in your best interest to want to see, trend continuation in any sort of security. That's your decision to make. This is the information I've laid out for you. That's the most that I can do. That's what I've got for this video. So blah, 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 no, spiel, drop a like, consider subscribing. Whatever you want to do, my friends. Catch you on the next one. Light taps. Light taps, baby. Tap, tap, tappity, tap, tap, fucking tap. Catch you on the next one. Much love and peace.